To today's market action with Citi head of U.S. equity strategy Scott Chronert and Vital Knowledge founder Adam Crisafulli. Great to have you both here. Scott, I'm going to start with you because we did just have record close for the S&P and for the Nasdaq here. Russell 2000 flirting with a new record close, although we didn't get that here, it looks like. And just in the last couple of weeks, strategists seem to be getting very bullish about their S&P 500 price target for 2025. You're not necessarily one of them. When I look at your base case of 5,800, with the S&P finishing right around 60.47 as we settle here, walk me through it. Why is this your expectation looking to 2025, and what does that mean for some of these different dynamics that could pull on stocks?
Very good question, Morgan. So that target was set mid-year, and the market obviously has run through us. Our base case for 25 has been that 5,800 level. We've used 6,400 as a bull case for next year. In either event, what you're talking about is limited upside based on what we know now. And I think the starting point for this is a very extended valuation setup, where you look at whether it's trailing PE for the S&P, forward PE for the S&P, or other related metrics. You're looking at, in many cases, the highest percentile valuation of the past 20 years. So the hurdle that's being set now in terms of what that implies for future growth expectations is quite high. Bottom line, while constructive on U.S. equities, no change in our underlying view that we think fundamentals are in very good shape. We just have to allow that a lot is being paid for already.
Adam, I want to get your thoughts on the market here because tech really carried this first trading day of December today. We have seen this rotation here out of small caps, out of the Dow, out of cyclicals. Is this a situation where maybe you're just seeing some shifts by investors as we finish up the year, or are there really genuinely concerns here in the market, especially as we are talking about a Trump administration and what some of these policies could actually bring for 2025, things like, for example, tariffs?
Yeah, so I definitely agree that valuations are very stretched, and that's obviously a big headwind. And then, I think as you look into the opening months of 2025, there does seem to be a gap between the reality of Trump 2.0 and some of the policies that are going to be passed or not be passed, tariff risk, et cetera, and then the reality of it. So there's a very positive narrative, but the reality could be a little bit messier. But in the near term, you have a very favorable macro setup as far as this data and the Fed are concerned. Just today, you had a very bullish manufacturing ISM with healthy growth indications and a big pullback in the inflation piece of it. And then just less than an hour ago, you had Fed Waller come out and give a very kind of Goldilocks type of a speech where he acknowledged the healthy growth trends and then also said that we still have inflation that's moving towards their 2% target. And so he's kind of inclined to cut again in December and then continue easing further into next year. So you have a decent earnings, growth, inflation, monetary policy set up in the near term, favorable year-end seasonality, but you definitely do have valuations that are very rich. And then you also have, like I said, I think, a disconnect between reality and some of the hope around politics in Q1 of next year.